So as we're looking at the markets, stocks market specifically for 2032, again, the broad commentary is that, we see a different pattern in the United States stock market when compared to the rest of the world. Compared to the rest of the world, it's very clear that the Dow and the S&P 500 will be head and shoulders above in performance than any other country. And again, this is for the projected high in 2032. That is not the case for Nasdaq. Nasdaq has a very different pattern. So to confirm, the pattern that we see for 2032 in the S&P and the Dow is for standout new highs, but we do not see that pattern in Nasdaq, nor do we see that pattern playing out anywhere in the world, which means that the capital flows will be coming in strongly to the United States stock market, but limited more towards the Dow and the S&P 500 and not Nasdaq. So it's a big call, but what we're seeing forming now is the end of a generational bull market in big tech, which has been going on for, perhaps 34 years. And this is quite remarkable, especially given all the euphoric hype around AI, to make this statement that the tech boom of the last 34 years is over. Again, quite remarkable. As we're looking at the near-term picture in NASDAQ, it appears as though we'll be testing support levels going into the June period. We've got a panic cycle in August, so that may prove to be an up month. And then it looks like the main target is December, January. And what we hope happens during this next few months is that we take out the key monthly bearish reversal in NASDAQ, which would confirm everything we just said, effectively that the bull market in NASDAQ is over and we've entered into a bear market, which should take us into the same low that we see the Dow and the S&P 500 forming, likely for 2028. But then again, the bounce up out of that low for NASDAQ does not appear like it's going to be two record highs like we see for the Dow and the S&P 500. And just to confirm for the Dow, the underlying support levels are 23,000. This is the Dow. Based on the high that we saw in February, that's a 52% decline, and a little bit less than what we saw in the 2007-2008 financial crisis, which was 57%, and a lot less than what we saw in the 1929-1931 Dow collapse of nearly 90%. So, we've talked about it before, but we're looking at this ramp up in World War III in 2026. That's what the models were showing. We're also looking at, a slow motion collapse in the world economy with an acceleration trend now, especially linked to the choke point in the Straits of Hormuz, which impacts everything from oil to gasoline, specifically diesel, fertilizer, sulfur. I mean, this is like the worst possible place in the world to have another front in the war cycle open up. But here we are, and it very much on time as far as what those models were showing, even as back as early as 2021 as it relates to 2026. So Facebook just laid off 10% of its workforce. We have Microsoft just today announcing a very significant reduction in force. They're actually going to be buying people out for the first time in the nation, in the history of Microsoft. So the first time in 51 years, Microsoft is going to be buying people out, which is also in alignment with the 8.6-year cycle. So 8.6x6 intervals is 51.6. So This does not bode well for Microsoft long term. That at the very juncture of this critical turning point on the 8.6 year cycle, Microsoft announces the first time ever buyout. And again, this seems to be more linked to spending for data centers and this push to develop the data centers. But again, it does not appear as though technology is going to lead in the years ahead. It looks like commodities will lead in the years ahead. And we're talking about things like nickel, copper, wheat, natural gas, oil, of course, silver and gold, uranium. These are your new market leaders going forward. And war just does a wonderful job of creating an environment of high prices due to shortages and wrecked supply chains. So, there's no question about it. The years ahead are going to be very, very difficult, but there will be a path forward for capital to move enormously into not only the Dow and S&P 500, but into the commodities space is going to be especially remarkable from a performance standpoint. Thanks for listening.